So welcome back, my dear students. Welcome back, everyone. This is a new lecture in the accounting, and we are working still on the transactions and the journal entries within the transactions in the journal entries. In any accounting system, we said that we start with the journal entries. Then we do the ledger, then we do the trial balance. Three things we have to do while we are working in any accounting system or accounting records. Let's go and see today what we have here. Company pays $700 for insurance coverage. We said any insurance received over the past few months. We said any expenditures. We will write the name. So it's from the insurance into the cash. From the insurance, 700 into the cash. Actually, because we paid already 700, so the cash is down. When cash is down, that means decrease an asset like you see here. So decrease an asset is credit. For that reason, the cash is credit. And the insurance payables is decrease in the liabilities. And decrease in the liabilities are debit. So insurance payable $700 to cash from insurance 700 into cash. We'll make for you one like this exactly, and you will do it by your hands, and I will help you to solve it, to work on it as well. Let us start a new page here. Control and V. And here we go. So let's say company pays 1,000. We'll change it for insurance. That was on March 1. On March 1, company pays $1,000 for insurance. This is the reason, the insurance. And pay means paid for cash. Pay means for cash. She paid in cash. Okay, so from insurance, you can say insurance payable, or you can say insurance into cash. This is the solution. Shall stay here for about 2 minutes for you guys to do it. Then we will move forward. Again, as I said before, any kind of expenditures, all the expenditures, you say from the name of the expenditure into the cash, if we paid in cash. From the name of the expenditures to the cash. Okay. Now, I'll give you 2 minutes to do it, please, if you don't mind. Just about 2 or 3 minutes to have it. Please remember, you will do it like this one exactly, from the insurance to the cash. But the amount will be 1,000 here. You don't need to write this, but we write the description of the transaction. I will go back to the exercise. Here it is. I'll just be waiting for about 2 or 3 minutes. Okay, my dears, here we go right now. We'll do the same solution which we did just now. Same thing which we did just now in the previous example. It's from the name of the expenditures, from the name, the expenditures, which is with its name into cash, like I showed you before. Exactly the same idea. Exactly the same idea will do it. So we'll do it like this way. So it will be from the expenses, like we said. I think I lost the paper. Okay, from here, insurance payable, that is 101, the slide 101. Okay, now we'll go back to it here. We'll take this one as an example, so that Control and C, and I will put actually here, just I will empty the table now. It's on March 1, so I will put here Control and C. I will put here March 1, Control and V. And we have to pay 1,000 for the insurance. So I will take the word insurance, Control and C. Sorry about that. Control and C. And I will put it here, Control and V, insurance, into the cash. Because this transaction from, we paid $1,000. So we paid from the cash. So the cash is decreased, which is asset is decreased. And then once the asset is decreased, that means when it's credits. So the cash is credits with the amount of $1,000, and the cash is credit here for $1,000. Here we'll put the $1,000 here. Here we go. This is our transaction from the insurance into cash. That was on March 1. From insurance into cash, 1,000, 1,000. The reason is that you can also write prepaid or insurance, which what's there, you can write it here. But the only thing that you write the name of the expenses into the cash, because they pay. Look at this word, they pay. So it's in cash. And actually the cash here, like you see, is decreased, is down. The cash box, out of this cash box, 1,000 went out. So the cash decreased. Once the asset decreased, that will be a credit. Insurance, of course, will increase. So it is debit because it's increased. Okay, so here we go. And like I showed you here just now, 101, here increase insurance payable, decrease liability will be debit, and cash will be credit. Then payment of insurance, payment of insurance. And that is the solution of this problem, or the first problem. So this is the first problem, and this is the solution of the first problem today about the expenses. And we had before a transaction like this. I was about also expenses like fixtures, whatever you buy, furniture, anything you will buy, van, anything you will buy from the name of the expenditure into the cash. We'll move forward now to the next thing that is very, very nice one. This is very, very nice one. And it's exactly like what we did before on the purchase. If I purchase something, part of it is cash and the other part is on credit. What will I do? What am I going to do if I do something like this? Cool, perfect. So I have here new truck is required by the company for $40,000 cash, of $10,000 paid at that time, and the remaining signed for the remaining. I told you before, if you didn't see the word signed, you write it account payable. You write it account payable. But when you see the word signed, change the word account into notes payable. Sign means wrote checks, wrote wrote bill of exchange, wrote promissory notes. That's fine. So we brought a car here, the company which you're registering for now, which you are recording the transactions, This company, they bought a truck. The truck is 40,000. Perfect. So this is a debt. Increasing. This is assets. The truck is an asset. It's increasing. Increasing asset will be debit. We will put it on the debit side. Cool. That's perfect. But when you come to see here, we just paid 10,000 in cash. So the cash here will be credit with the 10,000. What about the 30,000? The 30,000 here, we signed for like in the remaining, we signed for the remaining. Sign means you wrote a check, you wrote a BLE. So I told you once you see the word sign, then you write it notes payable. Notes payable. So here it goes now, the whole transaction, the tax is 40,000. We paid 10,000, this would be credit, and the notes payable. So the seller who sold for us this truck, he took in his hand $10,000 and he asked us to sign for him a note or a check for 30,000. This, when we translate it into accounting records, we write it notes payable. So notes payable for 30,000. Notes payable for 30,000. That's it. That's it. So from the truck, 40,000, this is in the debit, into cash. Yes, because cash here is credit because we paid 10,000. So the cash decreased in our own accounts. And the notes payable here is 30,000. The notes payable is 30,000 because it's also increase in the liabilities. Increase in the liabilities, liabilities means our obligation. Increase on what we have to pay. That will go into the credit part. Will go into the credit part. That's it. So I will make one transaction like this exactly, and you guys will do it on your hand. The next one. Here we go. Next one. Okay. Let me take it to a new page for you guys. So a truck of 100,000 cash is required by the company. Okay, cash was paid or acquired by the company for 10,000 is paid. 10,000 is paid in cash. Okay, let's say that here the 10,000 are 30,000. It's paid on the time of the purchase, but in notes payable. At the time of the purchase, we have also notes payable for 30,000. So exactly like what we did before, we will do here. But please, I will write for you a date on October 12th. This is new truck. This is the C of the new truck is here. New truck. Sorry about this problem and the error. Cash is acquired by the company for $30,000 is paid, and the $70,000 will be paid by promissory or notes or by notes payable. By notes payable. So please work on this one. Please work on this one. This is an exercise for you guys now. We work on it. And we'll do exactly like this one. We'll do exactly with the changing only changing in the numbers and the dates. That's it. So here we go from the truck into the cash and the notes payable. That's what you will do exactly from trucks into notes and yeah, same idea will be done here in this part. We'll give you around 5 minutes to do this or less than 5 minutes before we move into the next part of this lecture. So, commandeers, we'll move now to solve this question. Same likewise what we did here there in the other example. So we'll do now the table. We'll take a table from here and Control and C and just put it here. Then we'll move all the things in the table. That will be October 12, OCT 12. And here we will say from the truck, because it's a truck, Control and C. It's a truck. Control and C, and I'll put it instead of the insurance here. Control and V. Then the other side is cash for how much the cash is 30,000. We get cash for 30,000. So here we go. Cash for 30,000. And the other thing is notes payable. Notes payable. Since we said sign a check for 70,000. Just 1 second, I'll fix it because it's, I know it's not adjusted because some lines are up and some lines are down. So that reason this must go down like this, and at the same time it must go to a little bit to the right. Notes payable here also as well. So here from the truck to cash and notes payable. The truck is 100,000. Here is 2 more 100,000. This is the price of the truck. And to cash 30,000 because we paid cash for 30,000 and 70,000 we signed. The word signed, this word means that you write it notes payable. Sorry for that. It's notes only, N-O-T-E-S, notes payable. It's only one. Yeah, 1 O and 1 T. That's perfect. Okay, so this was about the second transaction we've done for today. I want you to train yourself. We talked today about 2 things. For the expenses, whatever the name of the expenses, from the expenses, what is its names? As example, the insurance into cash, because we paid in cash. So from insurance into cash. And the second one, like we see here from the truck, name of the truck, we bought the truck. This is an asset. Increase in asset will be debit from the truck into 2 things. How much we paid? We paid 30,000 in cash, but we signed notes, checks, or whatever for the rest of the amount, which is 70,000. So 70,000 is the rest of the amount will be notes payable. Shall be enough for the moment for those 2 transactions. Please, I want you to train yourself on them. Repeat back what we had today. Then shall see you in the next lecture. Thank you so much. Have a very wonderful day, everyone.